What's up, Banter fam? I'm your host, Miles. Welcome back to the show. In today's video, I'm going to be talking about USDC. There's been a lot of FUD lately, so I did some digging, some investigative research, and I dug into the documents, and I found some very shocking findings to do with USDC, which I'll be revealing on this show, and then I'll be evaluating whether I think it's safe or not as a stablecoin for you guys to use. Should you be getting out? Should you be staying in? Should you diversify? I'll answer all those questions in today's video. I'm also going to be doing a little bit of charting, looking through what the Bitcoin price is doing because it's exploding at the moment. It's absolutely pumping, and I think we need to look at it and look at some potential scenarios in the market. And then at the end of the show, I'll be answering your questions in Q&A form. So smash the like button. Going to be a massive episode. Got lots and lots of stuff to share. So let's just get straight into the show right now. What I want to start with is this comment that I made on my Twitter last night, and I said, "You're here in the middle of the bear market, willing to learn and grow. Be proud of that." And I think we should all be very, very proud. We're all here. The market's down. A lot of people lost interest. A lot of the tourists left the market. A lot of the people that were just in the market for quick money are now gone. And you're still here. You're still watching. You want to learn. You want to continue to grow as an investor and as a person. And I commend you for that. And I think we should all be proud of that and just remind ourselves for a minute, where we are. And, if you can survive this bear market, you could basically survive anything, because these have been some of the toughest few months I know of a lot of people's lives, even my life as an investor. And over the next 6 months, it could continue to be the case. But just be proud of that. Be proud that you're here, willing to learn and willing to grow. And we're going to grow together as a community. And hopefully through these shows every single day, I can help you grow as investors as well. All right, let's get into the charts because the Bitcoin price is exploding now. I just want to look at the smaller time frame first before we get into a little bit more of a macro trend here. We can see that we did break above this major trend. Now we had 1, 2, 3, 4 retests above this trend line, and we did break to the upside. So the next level of critical resistance that we are approaching is the 21K region. Now we know we've kind of been hovering in this range, and a major range to note at the moment is the 19.6 region to the 2100 region. Now, this region has been kind of a space where we've been bouncing, and it's where a lot of the liquidity actually lies at the moment. But we are showing some strength and looking like we're going to push up to the top of this channel here. Now, usually when we range like this for a while, we typically see an explosive move to either side. Now, the real question at the moment is, yes, we know we're consolidating, but where is that move going to come? Where is that next explosive move going to come? And I think I have the answer to that if we zoom out a little bit onto the 4-hourly chart. And my response to that would be this trend line. So we know we broke the smaller time trend. We know we're approaching the $21,000 mark, which is the next level of resistance. But then we have this next major trend. We can see lower high, lower high, lower high. But there's a very interesting trend happening now. We just made 1, 2, 3 higher lows on the 4-hourly. And if we look at the 1-hourly, we're just printing higher lows at the moment. So we are in a bullish continuation pattern to the upside. We can see we bounced off the 50 MA multiple times. So overall, in terms of a micro view of this market, micro technical analysis, we are showing bullish momentum, which is very, very interesting considering the dollar index is pumping because usually we don't show bullish momentum into a pumping dollar, but at the moment we are off the back of a rally across some traditional equities like the NASDAQ. So this is the key level I'm looking at. Right now, it's the $2,700 region. This is the next level of major resistance and support. If we break this, which is the next trend line, we can expect that to take us up to 21.4. Now, I'm not necessarily saying this will happen. There's a chance we get rejected and come back down. But my thesis is, if I had to make a prediction here, my thesis is that we are going to see a significant rally to the upside. We are already seeing the beginning of that, obviously bouncing from 18.7 all the way up to 20.5. But I do think that we will see continuation to the upside. Maybe there's a rejection in between. Maybe this move today might be a fake out. But over the next few weeks, I am expecting us to push up to these 21.5 levels and even higher than that, the 23 level. So, just one way we could get there is come back, test this trend, probably get rejected on this trend line here. But if we do break through into this range, there is a clear path to 23K. And I think, I wouldn't sleep on this as a potential move. And I've been speaking to a lot of other traders, and I know a lot of us are in the same boat that we are seeing this 23K region as a major region that we could potentially come and test. So I am expecting us to make a push up over the next few weeks. Yes, of course, there is further downside overall from a macro perspective. If I zoom out to the daily, we know that we are forming these pennants, accumulations, dumps, pennant, accumulation, dump, pennant accumulation, well, potentially dump 12-14, but that doesn't necessarily invalidate the likelihood of a rally to the 23K region in the meantime. And it's not something I'm going to write off. The bears have been in control for a long time in this market. And we know with any momentum, when the bears get control for a while, at some point that flips. And when the bulls have control for a while, at some point that flips. And I think a lot of the bears are just getting too overconfident in this market. And although the overall trend is down, and I won't fight the trend, being overall bearish, that does not mean we can't get pumps in the meantime, and that does give us opportunities to trade. So right now, what you want to be looking at is that break of trend on the 4-hourly, because that break of trend is now coinciding, with some nice support at 20.1. If we do break, 21.5 is next on our horizon, and obviously then 23K beyond that. In other interesting news on the charts, it's the dollar index, the DXY. Now, the DXY is basically a strength of the US dollar index. So the higher the DXY, the stronger the US dollar is compared to a basket of goods across the economy. So compared to the euro, compared to the stock market, the DXY right now is in an upwards channel, and it's bounced multiple times off this trend line. And we had this major resistance at 103.7. And, we said if we broke that, then DXY was probably going to go into price discovery, going, to its all-time highs and potentially even beyond. And that's exactly what ended up happening. We ended up breaking even above this top trend here, and we're now in price discovery for the DXY. So it's quite astonishing that how strong the US dollar is right now. We know the US dollar and the DXY index and Bitcoin are inversely correlated, meaning when the DXY pumps, Bitcoin tends to go down. And when the DXY goes down, Bitcoin tends to pump. So as crypto investors, and, a lot of us would love a rally in the Bitcoin price, we want to see the DXY come down. Now, when it's overextended like this, and we can see the RSIs are at the top on the 4-hourly, if we go to the daily as well, they should be ticking upwards. Ticking upwards. Once we start to see these RSIs round, we can expect a pullback. And that pullback would theoretically coincide with the Bitcoin breakout here of this horizontal. Potentially, that's a play that can happen. And, that would give Bitcoin a little more fuel to go higher. But we do want to keep our eye on this, because if the DXY keeps ripping, it's going to hamper Bitcoin's ability to go up. But when we're overextended, RSIs are at the top, I think we can expect a pullback into this channel. Then obviously the DXY has to make a decision, right? Because if it does come back into this channel, let's say test, comes back down, test the bottom like this, then it's going to have that critical decision of whether it breaks to the downside or whether it does the opposite and breaks to the upside. So that's the major decision the DXY has to make. All eyes on this at the moment for me. Bitcoin dominance is still ranging, so there's nothing much for me to update you guys on here. We're just kind of bouncing in this range that, we've been consolidating in for a few days now, almost a couple of weeks. So in terms of altcoins, it's all eyes on Bitcoin, all eyes on the DXY at the moment. Remember, if you do want to trade, you can trade on ByBit, link in the description. We're giving away a few things at the moment. Actually, we just announced, Rand announced on the show yesterday that we're giving away 10 Solana phones. So we know Solana's launching their new phone. It's around $1,300. So if you want to win a Solana phone, if you sign up for a ByBit account, using the link in the description, you're eligible to win. And on the show later today in 15 hours, Rand is going to be giving away Solana phones every single show for the next few shows. So make sure, if you're not signed up already, make sure you get an account, because you can deposit, not only get the $4,200 bonus, also have a chance to 10x your portfolio and win a Solana phone. So if you're not signed up, sign up, link in the description. I highly recommend doing so. All right, let's get into the meat and the bones of the video. So we've been through the Bitcoin price and the charts. Now it's time to address the looming thumbnail, the looming title that I know a lot of you guys probably want to know about. So just to kind of, before I get into this USDC thing, I want to explain what my logic is here. I've been doing a lot of digging since UST. I've been doing a lot of research and a lot of digging into stablecoins, because I want to make sure my funds are protected. There's nothing worse in a bear market than losing money in crypto, which a lot of us have. And a lot of us have come to that realization over the past few months. But on top of that, there's nothing worse than losing money in cash, because you may have lost money in crypto, but you don't want to compound that effect by losing money that is supposed to be dip buying money. So whenever you invest in a stablecoin or trade into a stablecoin or store money on a MetaMask in a stablecoin, you want to make sure that stablecoin is safe. Now, UST was a massive disaster. I took a big hit on that. I know a lot of you guys took a big hit on that. We want to avoid that in the future. So there's no way that I want to just turn a blind eye to some of these stablecoins and let this UST disaster happen in front of my eyes again. So what I did after UST is I started going through all the stablecoins. This started with the algorithmic ones like Frax. It started with the semi-collateralized at the time ones like USN. Then I got a little bit deeper. I started looking into the centralized ones like Tether, USDC, BUSD to try and get a more comprehensive view of what stablecoins were the safest. Now, over the next few weeks, I want to do videos on some stablecoins and give you guys my opinion on which ones I think are the safest. In today's video, I did an analysis of USDC, and some of the things I found were a little bit shocking, to negatively shocking in a lot of ways. That there's been some findings which I'm not so happy with, but I also have a thesis which I want to share with you guys. So let's go through USDC. Let's have a look at these findings. Let's take an objective look at the market. I'm not interested in pushing an agenda or shilling any stablecoin. This is just completely my analysis of USDC and whether I think it is safe or not. So smash the like button, guys. This is very, very important information. Make sure you smash the like button. I haven't been streaming so consistently, so it'd be good to let the community know that I'm live right now. Help me out a little bit. Show your support. Subscribe if you're not subscribed. And yeah, let's get into it and start looking into these stablecoins. So right now we have multiple big stablecoins over the $1 billion market cap range. We've got clearly the two biggest, Tether and USDC. Tether kind of has a lot of FUD surrounding it. USDC, it didn't have a lot of FUD for a while. It was probably one of my preferred stablecoins for a long time. But recently, there's been a little more FUD coming out, a little more negative news related to USDC starting to come out onto the market, which I'll explain today. BUSD comes in at third, and DAI comes in at fourth. And then obviously you've got your algorithmic side of things, Frax, coming in at fifth. So right now, Tether and USD are basically neck and neck. They're both around the $60 billion mark for stablecoins, and they've consistently grew their market cap over a long period of time. If we look at the market cap of USDC, we can see that it's actually been growing for quite some time. And this is a result of the sheer demand for stablecoins and the utility that stablecoins offer in both decentralized finance, but centralized finance as well. And we've seen that USDC has had consistent demand. Obviously, this demand is exaggerated in a bull market. In the bear market, it drops off a little bit, but there's still a growing demand for these stablecoins. And we can see that's why USDC has grown so quickly. If we look at Tether, on the other hand, and look at Tether's market cap, it is growing, but it's growing at a lesser rate to USDC. USDC is outpacing Tether, and in fact, over the next couple months, we can expect USDC to actually overtake Tether. We can see Tether right now has dropped from $83 billion market cap down to a $60 billion market cap. So we can see a clear drop off in Tether. And this is largely because the market now tends to view USDC as the safer alternative. Tether has a lot of FUD. It's a centralized entity that hasn't been as transparent as people would have liked with its books. Hence, it gets fudded against a lot. And not a lot of people, a lot of people feel comfortable, obviously, because it's the main trading pair on multiple exchanges. And I'm still comfortable in Tether for the most part. But there's enough of a cloud there to warrant diversification across multiple stablecoins. So a lot of people have decided to start parking some of their dip buying money and some of their money that they take when they take profits and trade into USDC as an alternative. Now, that's why the USDC market cap has caught up to Tether. But I wanted to do a little more digging into this because I saw USDC was gaining ground. So I wanted to work out, is USDC actually safer than Tether? Now, the answer is not as straightforward as you may think. There's a little bit of dirt around USDC at the moment, which I want to dig into and give you my opinion. So firstly, before you understand where this FUD is coming from, and I'll get into whether I think it's FUD or not as well, you have to understand how USDC works. So USDC works quite simply, at least in principle. It's a digital dollar. It's a stable coin. We all know what stable coins are. And for every digital dollar, USD can always be exchanged for $1 cash. So what you do is you take $1, you give it to Circle. Circle issues $1, which represents the dollar of fiat that they received, which in theory means that $1 USDC can always be exchanged for $1 as long as their reserves are balanced. So if they have $1 million in their reserve and you have $1 million of USDC, theoretically, at any point, you should be able to redeem your $1 million USD in fiat cash for for your stablecoins for fiat cash. Now, this is a linear system that should work if the balance that they're keeping in their treasury is the same as the amount being withdrew. Okay, so that sounds good in principle, right? So I did a little more digging into their website. Drake on Digital, shout out to him. He did a video on this, which helped with my research. And he found something very, very, very interesting. If you go to their, I think it's solutions, and click on the banks tab, there's a statement they put in here. And that statement is they'd like to optimize cash and liquidity. Now, what they say here is funds in Circle Yield are over-collateralized. All collaterals kept safe with BitGo, a third-party custodian with institutional clients. And our partner is Genesis Global Capital, a full-service digital asset trading firm. So they say here they try and optimize cash and liquidity, which means they have institutional clients, their primary partner being Genesis. All right, on paper, this sounds good, right? But then you do a little bit of digging into Genesis, and you can see that Genesis was one of the major stakeholders in 3AC. Genesis lost hundreds of millions in losses to 3AC as the contagion started to spread. So what happened is Genesis had exposure to 3AC, which had exposure to Luna. 3AC became insolvent, and they basically collapsed. They're going bankrupt. And Circle, at the same time, has a partnership with Genesis. So any losses suffered by Genesis, if that impacts the core business of Genesis, that in some way has an effect on Circle. And that's just kind of like a little bit of a cloud surrounding them right now. So I did a little more digging. So that's just, one reason to be a little bit wary of USDC. So I wanted some more confirmation. I wanted some more data, because one data point is not enough to make an objective decision in this market. So then I did a little bit of digging on how USDC actually works in terms of their SPAC filings, which is the IPO filings that they have to do, I think, quarterly in order to be transparent with their customers. But there's some issues with this, and there were some major issues that Geralt pointed out in this thread just a few days ago. It's pretty new news, this stuff. So he said, Circle loses money to pump USDC market cap. Circle pays higher rate of what Signature and Silvergate are normally making on cash deposits. Circle is paying an interest to short-term interest plus additional interest. Geralt's sources say that 5% per year at current interest rates. This is why Circle's losing money. They were raising money twice per year for the last few years to pay back those incentives. So he's saying that they're lending money and they have to pay off this money at a 5% interest rate, which results in a net negative scenario where they have to pay out more than they're actually able to generate in revenue. This is speculation, but it's still important to note in terms of how USDC works, obviously. And I've got the SPAC findings that I'm going to show you from the documents in a second. So he said the next part, USDC reserves are invested and recycled into Signet and SEN. Every dollar that gets deposited gets auto-swapped into USDC, and they can lend it out. Since they are banks, they can leverage their reserves and go fractional reserve. Circle has an offshore Bermuda company, provides USDC lending to avoid US controls and disclosures. This is the shady part, and this is the major part that I want to highlight in this video. It's that USDC is now lent to high-risk lenders. So USDC obviously was lent out to Genesis, but allegedly lent out to Genesis based on the evidence we have from the official Circle documents. But other customers of the loans include BlockFi, Celsius, Galaxy, Alameda, and obviously 3AC, which had exposure with Genesis. So it's basically every single borrower that either went insolvent or is facing issues in CeFi at the moment has exposure to USDC. So USDC potentially, which is what Geralt's alluding to, could be at risk of a bank run since lenders cannot return billions and billions of USDC, since they're negative in terms of the interest that they're repaying on these loans, and B, since multiple of these centralized lenders had exposure to USDC, this potentially, leads to some issues. Now, I do have a thesis on this, and I have counterpoints for and against, but I want to kind of tell you all the FUD first and then give my take afterwards, so we have a comprehensive view of this situation, a non-biased comprehensive view. So Deso came up, and so this makes big statements, right? Because he looks at the SPAC findings and he kind of jumps to conclusions on how USDC uses its money. So it lends out to other entities like Celsius, BlockFi. Those blow up. And then that creates issues because there could potentially be a bank run. So this is kind of the flow, and you guys can screenshot this right now or go into Geralt's page if you want to see how this works and wrap your head around it. It would probably take me half an hour to explain it right now, so I'll let you guys do that in your own time. But this is his thesis here. This is the flow of funds that he's outlaying. Deso goes a little bit deeper than this. He actually goes into the SPAC filings and he compares the previous reports of the documents to the current reports of the documents, and he looks for differences between the two. He says there's a lot of unsubstantiated rumors flying around. I admit there's a lot of rumors that can't be backed up. So he does his best to actually analyze the documents, what we have tangibly in front of us, and read between the lines and see what's actually happening with Circle at the moment. So he said there's some dirty stuff going on in Circle's inner workings, and considering they legally have to disclose everything one way or another, it's going to come up even if it's buried. So he looks through the SEC filings on SPAC, which they're legally obligated to file, and he goes through and he looks and compares month to month. And there's some very, very interesting findings. So this is an extremely long thread. So what I'm going to do is I'm going to go through the major points. I'm going to cut to the chase and summarize his major points because it's a very long thread, but I recommend reading it if you're really interested in this situation because there's some very interesting stuff in here. So to begin with, they made a change. They added more language warning and more CBDC language in the new version. They warn for delays in redemptions under extreme demand. So they expressly say that delays in redemptions, if there's extreme demand, could occur. This is in the new SPAC filings. It's legal filings from Circle itself. It's pretty irrefutable. It seems they were in dispute with a formal financial advisor. This is the next thing he uncovered. They already were, but the agreement was terminated, and then it alleges that it was done inefficiently. Smells like a court date. So he's saying potentially a court date could be coming from this. There's more stuff. Circle's trying to become a bank, which they already were, but now they're adding language which indicates possible delays, meaning that they're less operating as kind of like this one-to-one banking solution and more, and they're kind of pivoting towards more of a bank-style approach where they're actually willing to loan out funds in USDC to other entities, which Geralt was alluding to before. But now they've added language in the SPAC to indicate that this could be the case. He said it's likely this isn't going to be happening anytime soon, if at all. So he did say that. Spicy rumors considering what the Voyager guys found out, and this is the pre-Luna Trouble filing. He said there was a paragraph already in there in December, but some text was added, and it says, we regularly maintain cash balances at third-party financial institutions in excess of the Federal Deposit Insurance Corporation insurance limit. Furthermore, USDC reserves held in omnibus structures at third-party financial institutions are not covered by FDIC insurance and are subject to risk of loss. So he's saying reserves that aren't held in the FDIC insurance vault are not eligible for insurance and are subject to the risk of loss. So they're funds that they're actually lending out. This is the problem when USDC or Circle tries to become a bank. It kind of leads to that excess risk of loss that Geralt's talking about, and Deso is now backed up by his findings. The risk of loss text is new. So the thing is, they've added all these things. So what he's doing is he's comparing the old text in the old SPAC filings to the new text in the new SPAC filings. And he's comparing the two to see how Circle is pivoting as a business. Now, they're adding in many stipulations that weren't previously there because clearly they're trying to cover themselves. Whether this is a pure legal move just to cover themselves in a very, very unlikely event of a downfall, that's one thing. There's speculation that they're adding these new stipulations and these new terminologies because they're alluding to something, or they're alluding to a pivot in the strategy that they use to issue and redeem stablecoins, or at least lend them out, and what they do with their treasury. So he goes through many of these changes. Now, there's literally 20 of them, so I can't go through every single one of them. But there is a lot of very spicy stuff, as he says. Circle actually asserts that should an extreme bank run happen, such as a 100% liquidation, the US Treasury might freeze up and that they'll take a loss on the bonds. Now, this is the another major point. Circle stores a percentage of its treasury in treasury bonds. So they don't keep one-to-one fiat. They don't keep every single dollar in a bank account with US dollars. They actually keep some in treasury bonds, equivalent to the one-to-one value. If the treasury market freezes up, if treasury bonds collapse, and this is a risk you take, this is just a very obvious risk. If that market collapses, then Circle no longer has one-to-one redemptions between stablecoin issuance and treasury balance. So treasury bonds must stay akin to the amount of stablecoins they issued, or if there was a bank run, they wouldn't be able to pay. They'd essentially be insolvent because they wouldn't have the capital to pay out. This is a risk. So I'm not saying this will happen. I'm just saying it's a risk that it may happen, and it's not as clear as like, we're Circle, we have one-to-one assets, we'll always be able to pay you out one-to-one because we have that dollar sitting in a bank account. That's not how it works. Like, lending aside, they have funds sitting in Treasury bonds. So if the bond market collapses somehow, if there's like a major recession, it collapses, then they'll take a loss on the bonds. That's another very, very, very clear thing that could occur. And that's one of the major risks when it comes to Circle. So a lot of scary stuff amongst these articles. There's lending fears. There's fears of Genesis in the Luna situation. There's fears of Treasury bonds. There's fears of language shifts in terms of how they won't potentially pay out customers if there's extreme conditions in the market, which, you know, depending on what situation occurs, they could argue that at any time, theoretically. So there's a lot of dirty stuff. So is this stuff true? Is there any truth to this? And should we be worried? This is the next part of the video. So we've laid out a lot of the FUD. And a lot of this FUD is simply that. It's FUD. Because not all of these scenarios are actually going to occur. But my major point here is that not all of them need to occur. Not any of them need to occur to have you at least slightly concerned. If there is any smoke in crypto, if there's any potential issues, you have to be aware of them. This is not saying it's going to happen. This is not saying Genesis is going to cause Circle's downfall. It's not saying that their SPAC filings are directly alluding to any sort of extreme stress or tension. They may very well be operating extremely efficiently and can operate under duress. That may be the case. But the point I'm trying to make is that there are scenarios, clear scenarios that can occur that could result in a USDC depeg. Now, I'm not saying that will happen, and the likelihood is probably relatively small, but it can happen. And it's something as a community you guys should be aware of. And that's all that I'm saying here. So USDC is fully backed. This is the first thing to note. It's fully backed one-to-one. Yes, it has some money in the treasuries, but it is technically fully backed, and they post monthly attestations from their accounting firm to verify this. So it is fully, I'm going to show you, I don't have my screen share. It's fully backed. USDC is always redeemable one-to-one for US dollars. Theoretically, you should be able to take one USDC, redeem that for $1 at all times. Theoretically, that's what should occur. My only issue with this statement is if you actually go through Circle's legal docs, and this is on their website, this is public information. If you go through Circle's legal documents and you look at stipulation number 16 under the Circle user account agreement, the SPAC backed this up as well. But even on their website, it says, subject to section 17 of the USDC terms, we reserve the right to change, suspend, or discontinue any aspect of the services or the platform at any time, including hours of operation or availability of any feature without notice and without liability. We may, in our sole discretion, delay any transaction if we believe such transaction is suspicious, may involve misconduct, violates applicable laws, or violates any term of this agreement. That's number 16. That's law number 16 in their user account agreement. What this could be alluding to is that, yeah, okay, we redeem one-to-one US dollars. So yeah, sure, you have one USDC, you can get $1 back, but you're not going to get $1 back if we reserve the right to change, suspend, or discontinue our redemption function. So they're basically saying here that they're not liable to give you one-to-one. They can reserve the right to change, suspend, or discontinue any aspect of the service or platform at any time. You could argue that redemptions is an aspect of the service or platform, right? If you make that argument, then if you have $1 worth of stablecoins, technically they don't have to pay you out. Technically, they don't have to pay you back. So although it is redeemable for $1-to-$1, as long as that mechanism is working, there are situations where they could refuse a redemption. And then obviously, if that could lead to FUD and then panic, and then it would depeg, and then it would lead to a bank run. And that's like the worst scenario ever. I'm not saying it'll happen. I'm just saying that's a scenario that can happen. And you should be fully aware whenever you invest in a stablecoin, you should be fully aware of how it works. Don't just buy USDT or USDC or BUSD or any of these stablecoins without being 100% aware of how they work and doing your due diligence. If you're not doing right by yourself as an investor, right? It's our job to look through these terms and conditions. It's our job to look at how these mechanisms work. And it's actually our job to pay attention to the FUD. Because if we don't pay attention to the FUD, we can miss writing on the wall. We missed the writing on the wall with UST because a lot of us had a bias and we didn't want to listen to the FUD. Oh, DPEG FUD. Oh, it's just FUD. This is just FUD. That's just FUD. The reality is something is only FUD until it's not FUD. Voyager was FUD until it wasn't FUD. Celsius was FUD until it wasn't FUD. People were saying 3AC was FUD until it wasn't FUD. So anyone saying it's FUD, you can't make that argument because you have to pay attention to fear, uncertainty, and doubt. If you don't, you're not being objective as an investor. So when we look at USDC, you have to look at the FUD. You have to look at these threads. You can very much make arguments against them, but you have to look at them either way to stay objective, right? And if you disagree with any of the threats, that's 100% cool. Trade USD, hold USD, use USD. Cool. You've done your due diligence. That's awesome. I respect that. But don't just kind of blindly say it's FUD and then continue to turn a blind eye to things, because that's not how we should operate in crypto, especially not in times like this. We know how crazy the contagion is. We know how deep this has spread since the Luna collapse. You don't want to be in a situation where you're exposing yourself. Now, Circle did respond to a lot of these allegations. They said Jeremy Allaire, the CEO of Circle, says, we have zero issues. He said, Circle is in the strongest position it has ever been financially, and we will continue to increase our transparency. That's his latest statement. He said there was confusion between USDC reserves, which are regulated, examined, and transparent, and USDC that itself is used in lending markets away from Circle. So he says there's a difference between the reserves that they're holding and their lending markets. Personally, I think that the lending markets do have an impact on the reserves because it impacts Circle's books. It impacts their cash flow, which therefore impacts their ability to pay off these 5% interest rates, which therefore potentially leads to a situation where they're negative or turning a loss. I think it does matter. 100% it matters. But he did say that there is a difference between USD reserves and the USDC that they lend. Now, I do believe Allaire for the most part. I do believe that USDC is relatively safe. It's hard to put an exact percentage on. It's in the 90% safe. Like it's in my opinion safer than Tether. Trust me, guys. If you think there's dirt on USDC, there's more dirt on Tether. Tether's a lot shadier than USDC. At least USDC posts reports. It's all transparent. Tether's a little less transparent in my opinion. I do personally think that USDC is still an asset you should hold, but potentially, or not should hold, but like if you're comfortable holding it, it's not time to FUD out. It's just time to be aware of how this actually operates and the potential risks. But I want to offer a solution to a lot of you. Now, my solution would be diversify. My solution would not be to have 100% of your assets in USDC. My solution would be to actually diversify across stables. Why have it all in one stable? Have some USDT, have some USDC, and have some BUSD. This is the big one for me. I actually personally, might be my favorite stablecoin on the market right now. The only reason I say this is, and although I've loved USDC for quite a while, the Genesis thing worries me. The reason I say BUSD is one of my favorites is because it's issued by Paxos. It's 1-to-1 for US dollars. It hedges against volatility. It's stable. It has direct reserves. And I'm pretty sure they're not involved with lending, at least not to the extent of USDC. You can see USDC kind of wants to be this bank. It's got institutional solutions, bank solutions, institutional tradings, wallets. It's in crypto gaming. It's like everywhere. Paxos is very simple. It's a stable coin issued with Binance. It's 1-to-1. It's direct. It's on Binance. It's very, very, very direct. And it can be stored in your MetaMask on, ERC20 style, on the BNB. Obviously, it'll be a BEP20 token on the BNB MetaMask network. So this is my option for people that want to diversify, because I don't want to be all in USDC. No way. No way I want to be all in Tether. No way I want to be all in USDC. No way I want to be all in Frax. No way I want to be all in USN. I want to have diversification across stables, and BUSD is a great one to diversify into, in my opinion, because its mechanism is a little bit different. US dollars held in the reserve, 1-to-1, fiat. You can swap whenever you want. They do monthly attestations on BUSD's reserve, similar to Circle. The main difference here being they don't have as much FUD surrounding them. There's not as much speculation. There's no dodgy SPAC filings. There's no Genesis affiliation. That's the main difference with BUSD. So that's one of the reasons why I want to hold it. As I said, there's really no. Someone said shill mode activated. The thing is, imagine shilling a stablecoin, guys. Like, there's literally no benefit. Oh yeah, I'm gonna pump a stablecoin for $1 to a dollar. Like, I have no vested interest here apart from keeping you guys updated and keeping you guys safe. Because after UST, I feel like I have an obligation as a creator now to be a lot more objective. I learned a lot through UST. I have an obligation to dig into these stablecoins on your behalf, or at least point you down the right direction and help you do due diligence and get you thinking for yourself, because a lot of us got sucked into UST. I won't make that mistake again. I'm going to be scrutinizing every single stablecoin I put my money in, or I'll be putting it in US dollars in a bank account. It's as simple as that. I'll just answer a couple questions on the way. If you have a question, I'm just going to answer a couple questions for the next minute or so in case you want to know anything. UST, PTSD, of course. I think a lot of us do. I think it's important now at this time more than ever to be scrutinizing the projects we invest in, for sure. For sure. Literally hold dollars. Yeah, your option is to hold dollars in a bank account. The only issue with holding dollars in a bank account is it's not tax reasons. Firstly, there may be tax implications for you. Second, it's not MetaMask compatible, so you can't use DEXs. And whenever you want to on or off ramp US dollars, you need to go through exchange to your MetaMask, and then eventually you're in stables anyway. But I mean, for the average user, yeah, sure, you can hold it in a bank. But for me, it doesn't make much sense. Clickbait nonsense? Not at all, bro. Not at all. There's genuine FUD. There's genuine concerns, and I express those concerns. And I think I'm offering value by helping not only give my take, but then offering practical solutions like diversification into BUSD. Shows a lot of character not letting bad comments affect him. For sure, because what you got to understand is a lot of people are salty at the moment. A lot of people have lost money. I've lost money. Trust me, if I wasn't making content, I'd be salty as well. I'd be very angry because, you know, it sucks. This market sucks and it's difficult, but we have to stay strong. And as a content creator, I have to make the best content I can. And if that means talking about controversial topics because I think it'll help you, that's the step I'll need to take. Like, didn't Binance get fudded too? Every stablecoin gets fudded at some point. There have been Binance concerns, but not nearly to the extent of USDC. And I think USDC is a lot more topical and prevalent right now, considering it's not only a hot narrative, but it's something a lot of people are talking about. And it's something I want to address whilst you guys are thinking about it. But I will do BUSD and USDT analysis in the future. All these projects are propped up by the US dollars, for sure. Absolutely. They are propped up and the DXY is pumping. So US dollar strength is going up. This is inevitably going to mean the strength of your stablecoins goes up because they are pegged. They are pegged to the US dollars. Any more questions? Lost money in Donkey. Yeah, like that. I'll be totally honest and transparent about that. We did have a Donkey stable farm at one point in time. We managed to cash out. It had exposure to UST, which obviously crashed. We actually did manage to cash out before things got too bad. I think I don't remember the exact price we cashed out. It was like 50 to 60 cents. The majority of it, I think net losses were $500K out of a $3 million pool. A lot of people got their funds out, which was good. We reacted by shutting down the Planet Leverage farm before UST collapse, which was great. So we saved 20% there. We didn't do so well with the anchor position. 40% was anchor, but that's why we did diversify into other stablecoins, because we didn't want to lose it all. And although we protected ourselves and came out a lot better than we could have, we still did lose some on UST, and I honestly feel awful about that still. But at the same time, at least, you know, we managed to get the majority out. But it does suck because people still lost not all of their funds, but a percentage of their funds in what was supposed to be a stablecoin farm. But like, none of us saw UST coming. It's part of the reason why I make all of these videos now, because we don't want that happening again. But luckily, we were able to recruit most of the funds. Just, you know, unfortunate, not all of them. Thank you, Elizabeth. Thank you for the support. Thank you, everyone, for supporting at the moment. Yeah, Jeremy said if you don't want to listen to any FUD about stablecoins, if you lost UST, you sure are listening now. Exactly. We want to be transparent about this stuff. Why do you think DXY is in price discovery mode? Many reasons. Inflation compared to other currencies is one of the major reasons this is happening. Actually, the DXY pumping is positive for inflation. It has to do with asset prices, speculation, and also the fact that a lot of people are kind of going risk off and they would prefer to hold dollars. And when you get people going risk off and they take money out of other asset classes, then obviously dollars go up because there's more strength in the dollar. Interestingly, though, over the past day, despite the DXY having a macro inverse correlation to Bitcoin, we are seeing this flip a little bit because Bitcoin is pumping alongside the DXY. So that's actually an interesting thing to note at the moment. Thanks, Joby. Thanks, everyone. Thank you guys all for joining. How tall are you, Sheldon? I am 6'2", actually quite tall. Ran is like up to my waist. When I first met Ran and Sheldon, I'm not trying to throw shade at you guys, but when I first met Ran and Sheldon in real life, when I went to Cape Town, I was shocked. The first time I met Sheldon, I went to his apartment to have dinner, and like he was like, they're like up to here on me, Ran and Sheldon. I was like, whoa, am I super tall or are you guys super small? Do you wear bathrobe? Like, yeah, I don't know. I feel like 6'2" isn't that tall, but for some reason, maybe that's just because my friends are really tall. But whenever I meet people from overseas, it's like we just kind of tower over people. It's hilarious. Aussies are built different. Yeah, must be all the milk and Milo we drank as kids, huh? Do you wear bathrobes in the bear market? Absolutely. I don't know. It's kind of become a bit of like a trend now. I just like waking up, having my coffee, charting, coming on, streaming, having fun with you guys. Like that's a good morning for me. So I like wearing the bathrobe. It makes me relaxed. It feels like the show's comfortable. It flows better. I don't know. Rather than dressing up, I don't know. Maybe I'll dress up in a shirt one day, but I'm enjoying the bathrobe at the moment. Ran will fire you now. Sad. Yeah, he's like to my waist. He's like a midget. My shoe size is like 13 as well. I'm like wearing massive flipper clown shoes. I'm almost tripping over my shoes when I walk like up the stairs or something. It's hilarious. All right. Thank you guys so much for hanging out with me. I really, really enjoyed the show. Make sure you smash the like button if you enjoyed. Remember, if you do want to support the channel and win money in the process, there's a link in the description to sign up for ByBit. Obviously, you don't have to, but if you were going to start an account anyway, then you can support us and we can support you with the $4,200 bonus and 10xing your accounts live on the show. I know a lot of you already have accounts, but just for the ones that don't, that's one way to support us. Thank you guys so much for tuning in. I hope you have a lovely day, and I will see you in the next one. Peace out.